Jeff Bezos steps down as Amazon CEO, LUCKIN COFFEE files for bankruptcy, and just what is an SPAC? All this and more on this week's Invest Roundup. Hey guys, it's Terry again. We hope everyone had a great Super Bowl weekend. How cool was it when Tom Brady threw that touchdown pass? Anyway, onto the stock market, the craze around GameStop has finally mellowed and Robinhood has lifted trading restrictions on them along with AMC. COVID vaccine rollout is still a struggle as more and more new strains appear, with a new strain in South Africa last week. But other than that, the stock market had a fair week with some major announcements. One of it from Amazon, and a coffee chain wasn't lucky enough and had to file for bankruptcy. Yikes. So let's get into this week's news. Disclaimer. Whatever stock or news we talk about is not a recommendation to buy or to sell. These are all just news we deem important, things we believe you need to know if you're invested in the stock market or if you intend to invest. First news item, LUCKIN COFFEE files for bankruptcy protection. I'm just gonna come out and say it. When something has the word luck in it, half the time things will go horribly wrong. I mean, you would just jinx it. Case in point, 7 months ago, Starbucks' so-called competitor in China, LUCKIN COFFEE, was delisted on Nasdaq after an accounting scandal. And even though business has been slowly recovering since, the company unfortunately has filed for bankruptcy protection in the US last Friday. So, what happened exactly? Using a series of complicated schemes and internal transactions, the company apparently cooked up some fake numbers in their financial report to create the illusion of an explosive growth in business, when in reality, sales figures that were reported was 340 million more than the actual sales figure. Seeing the growth in the business, naturally, investors were excited, demand for the stock increased, which increased the price of the stock. And when the share price was through the roof, the management cashed out their stocks on the hype, leaving investors high and dry. For seasoned investors, this is also known as pump and dump. And from there, even more drama ensued. The stock price plunged 90%, they were delisted by Nasdaq for fraud, they were fined by China's Ministry of Finance for the scandal along with a bunch of other companies, the chairman and CEO were removed. By the end of it, it was like watching the Twilight Saga. The company finally filed for bankruptcy protection under Chapter 15 with the United States Bankruptcy Court last Friday to shield itself from legal action from US creditors as they work to restructure their debts. Even though business has pretty much recovered in the last few months and they currently seem to be a medium-risk investment, we will still be careful. We hope that's the end of that saga. Well guys, looks like LUCKIN COFFEE has lucked out. Phew, been holding on to that for the last 7 months. Second news item, everyone's getting in their money for Wall Street's latest toy, SPACs. But beware, now if you've never heard of SPAC, it stands for Special Purpose Acquisition Companies, or more famously known as blank check companies. And how these guys work is like a hermit crab. An SPAC is the shell company or the crab's shell, which goes for IPO and raises money to merge with a privately held company of their choosing, the crab. These two will then join together to become a publicly traded firm, and in most cases, the shell company will take after the name of the acquired company. So why are they called blank check companies, you ask? Well, these guys generally don't have a merger target when they are formed and just sort of see how things unfold as they go along after they've raised the funds. So it's like investors are sponsoring them to do whatever they want with a blank check. I know it sounds crazy, but believe it or not, it is one of the hottest trends in Wall Street right now. Yeah, I know, right? I wish my mom gave me a blank check too. Lots of private companies are now seeing it as an alternative to the conventional IPO when there's a lot of scrutiny, uncertain valuation, and worrying over if they'll raise enough funds. In fact, in just January 2021 alone, SPACs have raised nearly 26 billion worth of share sales, and 180 of them have already gone public. That's all in 1 month. 31 days. A quick scan around the internet also shows that a former Boeing CEO has filed plans to raise around $200 million for his SPAC. Another fintech, Payoneer, is planning to merge with an SPAC owned by Betsy Cohen in a $3.3 billion deal. And another headline shows that this trend is now moving towards Asia, with a fund manager calling Asia the next big treasure trove for SPAC candidates. Guys, they're everywhere. Now we've all heard of this saying, one man's meat is another man's poison, so it's probably no surprise that there are investors that are opposed to this. Some say this is a fad in the overheated market, the guys over at Barron's say that we should not buy into the hype, and some others say it is all sweet talk and bullish pictures until the business really gets going. And I can't say they're wrong. There has been research that looked at 115 completed SPAC mergers and found that 65% of those stocks declined a month after their mergers closed, while 71% were down a year later. Sounds like pretty nice, guys, so my advice is tread carefully. Oh, and one more piece of advice. Why don't you subscribe to our channel so that you can stay up to date with the latest market news? We upload videos every Wednesday and summarize just what's up in this crazy world of investing. Now, let's get on to our last news item. And finally, we look at some big changes in Amazon. For almost 30 years now, Amazon has been synonymous to Jeff Bezos. The shopping platform, of course, not the forest. From a small online bookstore, it's now an e-commerce giant, and it's quite safe to say there are people who can't live without it because it carries practically everything. In fact, I think I can prime some steak for dinner.
Wait, aren't you vegetarian?
Shh. However, all good things must come to an end, and sadly, that is the case for Jeff Bezos and Amazon. Following the footsteps of Larry Page of Alphabet Inc. and Bill Gates from Microsoft, Bezos has announced that he will be stepping down as Amazon's CEO last week, which means Facebook will now be the only tech company in the tech Big Five that still has its founder as its CEO. Or as Business Insider puts it, we're nearing the end of the founder-CEO era in big tech. This is like KFC without the Colonel, McDonald's without Ronald McDonald, The Big Bang Theory without Sheldon, or...
Get on with it!
Sorry, where was I? Oh yes. As of the third quarter this year, Jeff Bezos will be taken over by cloud computing chief Andy Jassy as the CEO, and according to their chief transformation officer, this is to underscore the importance of Amazon Web Services for the company to move forward. Under Jassy, Amazon's cloud business has signed major customers including Verizon, McDonald's, Honeywell, and the division's quarterly revenue had consistently increased by double digits. So I think it's safe to assume that we're in good hands for now. Meanwhile, Bezos, who will transition into the company's executive chairman after Jassy takes over, maintained that he's never had more energy and this isn't about retiring. The announcement for his resignation as the CEO came together with the company's announcement of a third consecutive record profit and quarterly sales above $100 billion. For the first time ever, I'll tell you something, he may be stepping down as the CEO, but this guy sure knows how to cushion a blow. At the moment, it doesn't look like the share price is affected, which means investors must be quite confident in Jassy's ability to lead the company, and in fact, it might be a little overvalued at the moment. Thank you for a great 27 years, Jeff Bezos. So, those are the 3 important investment news we had to share with you this week. Once again, we encourage you to get more information if you'd like to act on any of the companies we've shared about earlier. Comment below and tell us what you'd like to see on the next Invest Roundup, and share this video with your friends, especially those who are invested in the stock market. We'll see you next week.